Here's your money briefing for Friday, June 30th. I'm J.R. Whalen for the Wall Street Journal. Banks are sending out more requests for annual salary information from their customers. Wall Street Journal personal finance reporter Imani Moise joins us to explain why and whether customers are obligated to respond. So, Imani, wouldn't the bank already know your annual income? They could get that from the credit reporting agencies or figure it out based on your credit card spending or your direct deposits, right?
It's interesting that you say that, and you would think that your bank knows everything about your financial life. However, how much money you make tends to be a place where they're typically flying blind. So the monthly credit reports that they get from agencies, they really only tell a bank how good you are at paying your bills, not about how much money you're bringing in. And outside of your primary bank account, where you maybe have direct deposit set up, most credit card lenders don't know how much people make.
So do they want to know just your salary or all of your assets like your investments?
They want to know your earnings. So if you have investment income, you could include that. If you have something like child support payments or some other type of annuity, you could include that. And you could even include your spouse's income. They just want to know how much money you have coming in available to pay your bills in a worst-case scenario.
Is that the primary reason they want to know all this?
Yes, it's a form of risk assessment. So credit card loans aren't secured like a mortgage or a car loan. So they want to make sure that their customers continue to have an ability to pay.
So in some cases, banks are making repeated requests for salary information as opposed to maybe once a year. Why the urgency?
You have to look back on the last few years, especially what's happened in the job market, right? We had the great resignation. People were switching jobs at a record pace or quitting, moving into the gig economy. And then we started to see headlines about layoffs, right? The likelihood that a bank customer has switched jobs and had their income situation change over the last few years is much higher today than it has been. And the banks have really ramped up efforts to try to get this information. So emails and letters sent out to customers requesting new income information is up 500% over the last 3 years.
All right, so raising credit limits is one thing, engaging someone's ability to pay their bills is one thing. But how badly do the banks want to know this information? Is there any incentive in this for the bank customer?
So it depends on the bank. Some banks are being particularly generous and saying, hey, we'll even reward you with credit card points if you tell us your most recent income information. And that can be very, very valuable, especially people who are a fan of travel cards or booking flights on miles, as those people know very well. But the other potential upside to keeping your income information up to date, particularly if it's gone up, is that you could qualify for maybe an upgraded credit card or a home equity line of credit or some other kind of loan product.
So does a bank customer have to divulge their salary when asked? What if they don't?
You don't have to, and it's important that you know that. It's a completely voluntary request. There are rarely consequences for people who decide not to update their income information. However, if the economy is looking particularly rocky and that lender wants to pull back on lending, you should know that you may be one of the people that they maybe reduce a credit line or close an account entirely if you don't provide them with updated information.
So it's better to give the bank a clearer picture of your financial situation.
Yes, the more that a bank knows about you, the more that they'll say that they can personalize their offerings to you.
So is there a risk here for the bank customer if they don't supply the information?
Technically, yes, but it's very, very rare that a credit card company will cut off a customer, either reduce their credit line or close their account without some kind of reason for concern. So, for example, if you've typically always paid off your balance in full every month and all of a sudden you start making only the minimum payment, they might be a little bit concerned. And then if on top of that you ignore the request for updated income information, you might be more likely to get cut off.
Is there a better time to tell the bank about your salary information than not?
Most of the analysts that I spoke to only recommend updating that information if your income has gone up or even stayed the same, because that might mean that you're more likely to get your credit line increased, which typically increases your credit score because it lowers your utilization. But even if your income has gone up by a significant amount and you feel like a higher credit line would maybe entice you to overspend, then maybe just leave it blank.
So what if somebody fudges the numbers about their income? Does the bank have a way of verifying the data a customer provides?
Not really. Most of these requests, again, they're fully voluntary and they don't require any sort of proof. The only time you may be required to provide proof is, say, in a bankruptcy hearing, because if it comes out in a hearing or in another legal setting that you lied about your income, that's fraud. And analysts say that makes it less likely that your lender is going to work out a deal with you.
And what happens if your income has changed significantly in either direction and it's different than what the bank currently has on file?
So if your income has dropped meaningfully than what the bank has on file and you update it, you should be prepared to have your credit line cut. If your income has increased significantly, you should prepare yourself for a lot of sales calls.
So you're a more attractive customer.
Yes. They're going to want more of your business.
So people get asked to divulge personal information all the time, and this is just added to that list.
We might be bumping up against kind of data fatigue. A lot of people are feeling like they're constantly handing over personal data and maybe being a little bit more protective, even though these questions from banks aren't really new. The analyst that I spoke to for this story said that these requests now feel intrusive. And even though she has studied these communications for years and she knows that they're not new and she knows exactly why lenders would be asking for this information, she's more hesitant to hand it over now.
That's personal finance reporter Imani Moise. And that's it for your Money Briefing this week. We had production assistance from Jayla Everett. Our supervising producer is Melanie Roy. And our executive producer is Chris Zinsley. I'm your host, J.R. Whalen. Thanks for listening, and have a great weekend.